Okay, so as it slowly loads itself up on YouTube so that no one misses the live stream, or at least no one misses the webinar, let's just get started. So the general markets have been extremely brutal as of late. I think we can safely say that we are pulling back because there are few things that are happening. Firstly, in July, we're going to have the G20 meeting where they're going to start discussing the regulatory framework. So I'm not sure how relevant that is going to be, or whether that is going to be, or that is causing the markets to be pulling back so drastically. I think yesterday was really bad. I would safely say that it is one of the largest pullbacks so far. But if you look at it from a different perspective, we were at 6,005 and we dropped to 5,008. I don't really feel that there was a need to be too worried. But however, a lot of the altcoins were taking a huge hit. So that was the part where it was a little bit, it was a little bit concerning. And yeah, I think the most important is to try to understand what's happening in the markets, and also how, as you know, I gave two live impromptu webinars back to back so that people will have a gist of what to do. So today, I think for those who have missed those two and would like to be a little bit more certain about what's going on, I think today is that day. And also today, apart from the general markets, I would like to cover why your financials matter. I think a lot of people feel that, okay, it's always centralizing around how to make money around cryptocurrencies and whatnot, but that's not the point. I think the whole idea is also to look at your finances from a holistic perspective, and then after that, we use all the various tools, in this case cryptocurrencies, to kind of help you to create a very nice holistic portfolio, also in terms of the way your spending patterns and all that. We'll address all that today. All right, so Andy, without further ado, just take it away. Okay.
All right. Hey guys, can you hear me? Okay. Okay. So good morning, good afternoon, good evening, everyone. So today I'm just gonna cover a few general market news, and then I think the more concerning one will be the cryptocurrency news. I'm gonna cover a few of them as well. So the top 5 things to look out for this week. The US-China trade tension. This is pretty obvious, right? And we all know that Mr. Trump this week will be announcing certain tariffs as well. I think there's also auto tariffs coming in this week. The only question is, to which country is it going to be imposed on? It's not stated yet. And also, Chinese side will have to try and negotiate with the US side. If not, it will just be they'll just retaliate with the same kind of tariffs. So I honestly think this is the only thing causing the market to be on the jitters, to be uncertain. So a lot of traders are having a tough time because of this particular news. So yeah, so Beijing stated it will deliver its own set of countermeasures, and this is just okay. Anyway, so US Q1 Q1 GDP final estimate. So with this is actually quite a big news normally. For GDP news, traders actually just trade on GDP. We can also see that the economy has expanded at relatively healthy of 2.2%. And it grew by 2.9% in the fourth quarter of last year. So what had happened actually is, and I'm not giving credits to Trump's administration, but I'm just saying because of his certain policies, because he was a businessman, the country, or US per se, is actually improving in terms of its economy. Okay, and so George Soros, and I mentioned this before, that the next up and coming economic downturn will be led by the Eurozone. It will not be led by the US zone. It will rather be led by the Eurozone. So I think we need to take note of what is happening in the Eurozone to kind of gauge when the economic downturn will come this time around. All right. So US PC inflation data. So the core PC prices are expected to rise 1.9% compared to 1.8% increase. Now, the thing is, for those who don't know, inflation actually is a gauge of how good the economy is doing. Now, Japan, for instance, has been on a it's a deflationary economy for quite a fair bit of time, and also partly because of its aging population, and therefore it's in a deflation mode. But deflation actually meant that none of your prices are increasing a lot, and also meant that the country is not improving, right? The aggregate demand or the demand of your products is not going up enough. The spending, expenditure, everything is not going enough, and therefore you have a deflationary economy, and therefore your people are not doing well. Okay, income cannot be inflated, income cannot go up. So there's a lot of problems when you have too much inflation as well. That's what we call hyperinflation, right? Zimbabwe, things like that, where their currency goes up by 8%. There's practically nothing you can buy. So inflation has to be curbed in that sense. Range from 2 to 3% is always healthy. Okay, so inflation data is something that a lot of economies use to track how good the economy is moving. Okay, UK final first quarter GDP, same thing, Eurozone flash inflation. So currently in June and coming end June, we are closing off the quarter. We're also closing off the midway, the half point kind of thing for the year, and therefore you see inflation data, GDP data coming up. All right, so this could be an indicator of how well the particular zone is moving, is doing. Okay, and you can see Germany, France, Italy, and Spain. These are actually the four major economy contributing to the Eurozone mainly. Germany being the first and France being the second and Italy being the third. So therefore, when Italy, a few weeks ago, when they say they want to pull our Eurozone, it's going to have a lot of impact because they are kind of like the third biggest contributor to the EU in terms of taxation. All right, because after the UK left Eurozone, they actually had a big hit in terms of profit, in terms of how EU functions. So, and that's why UK kind of have to pay a lot of reparations for it. So it's a bit unfair, but it actually sets a lot of example to the EU, to other European countries that actually it can be done, right? But of course, you need to have a currency of your own first to make it easier. Okay, so I think this is one article that I think you all need to understand, and I think it's quite interesting. So last Friday, right, actually US dollars was on a 8 months high. Okay, and if you all don't know, in terms of forex, right, what we call a carry currency and a safe haven. For carry currency actually meant that the US dollar has now the interest rate has went up so much that as long as I hold US dollars, I actually get more interest rate than holding on to, example, Sing dollars. And this carry trade, if I do it in forex leverage, example, on a margin trade on Ovender, FX market or whatever, XM, whatever, I actually can make interest. Okay, I actually earn interest just by holding on to US dollars by trading off my Sing dollars. Like giving up my Sing dollars, I hold US dollars, I can actually make interest because of that difference. And that's what we call a carry currency. Not every currency can be a carry currency. Tendency is New Zealand dollar, Aussie dollar, and Swiss franc are normally the contenders for carry currency. So to me, it's a bit surprising that the analysts are saying that US dollar can become a carry currency. This is pretty rare. And this also meant that US dollar is getting popular, all right, and people are trading more into US dollars, holding on to US dollars, and that could also potentially affect the cryptocurrency market as people get out of Bitcoin to go into US dollars as a safe haven. So that could be one of the impacts that we need to understand. Like Tether now kind of has, okay, Tether on its own has no value, right? Because it's printed in that sense. But US dollars has value. And as a carry currency, it can actually make potential more interest than holding on to any other currencies of any form. Okay. So for those who are based in the US, this is good news for you because you know that your currency is strengthening, is appreciating. So just by holding on to US dollars, your value actually goes up, right? So I'm just giving you some advice. Certain currencies like Euro, like try not to hold too much, honestly, because they are going through what we call the quantitative easing into next year. So they're going to print even more money. Therefore, printing money kind of curb what's happening, trying to create more money so that the economy will flow in that sense. But it actually degrades the value of the currency, all right, the actual value of the currency. And you could see the inflation of EU to be averaged at 1.6% as compared to what US is doing at 2.2%. Okay, and the quarterly growth forecast is 0.4 to 0.5% range. Okay, so it's actually very, very slow. And the ECB are very unwilling to raise interest rate at all. And it's very hard honestly, it's very hard for ECB or the Eurozone to raise interest rate because that could impact the whole entire many different nations and countries, right? So it's very hard. But for US, for instance, for Canada, for Australia, it's easier because it's just one whole state on its own. Okay, so there's a lot of considerations for ECB or for EU per se, and I can understand that it's not easy to push changes, okay, because it's so many different kind of culture, so many different kind of people. It's very difficult. So when I was telling you, carry trade, carry currency, and safe haven can be something that you all want to take note of and understand that US dollars is on the rise, it's appreciating. And when Trump's administration comes out with more protectionism kind of policy, it actually empowers and strengthens and appreciates US dollars. Okay. So Asia shares actually docked by trade worries. Oil actually went up quite a fair bit, and I think it's because of OPEC news this week. There's going to be more news coming in. So you can actually see here, Trump threatens to impose a 20% tariff on Friday on all imports of EU assembled cars, while we're talking about all continental cars into the US. All right, so that's quite significant. Oil prices were supported after OPEC and non-OPEC producers agreed on a modest increase in oil production from next month. And therefore, oil prices on a high since last week on a Friday. Okay, so for those who are pumping, for those who drive, pumping fuel is a sad thing. Okay, so anyway, let's go to cryptocurrency news quickly. So the Winklevoss twins win yet another crypto trading pattern. Okay, to summarize this, they do own Gemini Exchange, right? And they have actually got the patent to start a Bitcoin ETF, okay, and exchange traded fund. So it's not new. But interestingly, they're gonna start this new ETF, and we'll see what's gonna happen. It's gonna provide sufficient. Okay, so anyway, so I think Gemini is doing. I mean, I like Gemini. I like using it. And creating an ETF could actually open up to more paths, right? And it's a pattern. It's a pattern for ETFs, which I don't understand why you need a pattern for it. But it could be the technology. It could be something that's underlying that we don't know yet. All right, so we'll see. Okay, so another good news. I think it came through over the weekends that Mt. Gox will compensate 1 billion in Bitcoin. But will not sell until 2019. I think someone in the legacy chat actually had some Bitcoin on Mt. Gox, right? And 30 plus or something like that, 30 plus BTC or something like that. So it may potentially be released, hopefully. And let's just hope they don't dump on the market, really. Okay, so this is sick. Okay, anyway, creditors will receive prepayment in Q1 of 2019. So good news for you guys. Okay. Now, I think this is quite an interesting article. Ethereum co-founder says cryptocurrency market to look rosy soon. This was published last week, last Saturday, I think. And I think the Ethereum co-founder actually mentioned that he's looking at two particular project which I posted, which is Quantum and Venchain, all right, which will actually lead the next China revolution. So he actually kind of forecasted that. All right, how true will happen? We don't know. So I think this is what Ryan was talking about, which is the G20 meeting. I think they're accelerating the pace on it. And so it's the first step towards unified regulation of cryptocurrency. And they have very specific tasks and very specific things to talk about. And they actually mainly want to talk about money laundering and terrorist funding, okay, through cryptocurrency and try to regulate it. And so the main summary is this part. The technology behind crypto asset has the potential to promote financial inclusion, but the impact on financial stability and potential users in tax evasion and illegal activities needed to be understood first. So the regulation is not saying, okay, if you understand where it comes from, it's not saying that they are boycotting the technology, they're boycotting cryptocurrency to begin with. It's really all about financial inclusion. It's all about blockchain technology in that sense. But also there's the negative side that most of us are aware of, right? The potential use in tax evasion, like, some people will just say, my account got hacked and avoid tax, or, illegal activities like prostitution, drugs, and terrorist funding, money laundering. So there's a lot of things for G20 to kind of decide together. And I think whatever that comes out of it, be it good or bad, we'll see. And I think they are settling the dates for the G20 summit. Yeah. So I think the last news for today is, Ryan was talking about it also, was that Bitmain, which is one of the biggest mining rigs in China, or basically in the world, it's approaching 51% of total Bitcoin network hash rate. Now, for those who are not really very aware, especially for Bitcoin protocol, if you reach 51%, you can alter the code. Okay, it's like a network hack in a sense. You could actually alter the code. And I don't know whether you all remember for Verge, XVG, some hackers actually hack into 51, take control of 51% of the network hash rate of Verge, and therefore potentially wanting to change the code. And that's why Verge has to go through a fork. To kind of avoid that. So this is actually something we need to take note of, right? And Bitmain has actually mined 42% this past week, okay? And I think that's kind of interesting, right? They are taking control of the hash rate. But as we all know, kind of, that well, anyway, Bitmain also mine Bitcoin Cash, genius. Okay, anyway, so the thing is, we need to understand is that mining, in terms of mining power, China still controls majority of it, right? Unfortunately, you have to face it. They do. Okay, so we will see. Hopefully, Chinese government do come up with some great news, and then all of us will be celebrating. Okay, yeah. So anyway, I'll pass the time over back to Ryan. Yeah.
All right. Thanks so much, Andy. So, okay. Today my episode will be focused more on why your financials matter. I think most of the time we are always. I think you're still not on me.
Oh yeah, sorry.
I'm doing the double reverb. Okay, so my focus is definitely today more on helping you adjust your finances and making sure that you are in line, right? Because I think a lot of people are always interested in how to make money, how fast can I make this money, but no one is caring about their day-to-day expenditure and how to manage their assets. And no one thinks about the broader perspective, because I think if you are always consistently looking just one step ahead, right? Because how I notice is that most people, especially if you're in a regular paying job, you tend to only look at until anywhere from the beginning of the month to the end of the month, right? So you don't really want to look too much into the future, because you know that for sure every end of the month or middle of the month I'm going to get my paycheck. So after that, the day-to-day routines and everything start to become very, very mundane. So I'm going to start by at least looking at stuff from a perspective where, if you were to have this kind of spending patterns or this kind of saving patterns, where is it going to bring you in the next 3 years, right? Keep it simple, 3 years. Okay, because I think for everything to start to mature, you have to give it at least a nice time frame, because your existing patterns, especially now, have been cultivated through the many years of the way you have been running your life. So, for example, let's say you have a habit of spending more than you earn. Now, that's already a red flag, right? How are you coping with these expenditures is another issue altogether. So, for example, if you are someone who makes $5,000 and then you spend $3,000 on random stuff through eating, transportation, everything all in, and you have about 2K left. Now, having about 2K left, what do you do with that 2K? Do you tend to spend it also, or do you tend to want to put it into something that helps you grow your funds? So you have to kind of learn how to segregate all these kind of things. Also, people who tend to spend a lot tend to also have a lot of different types of credit cards. At the same time, it happened to me. Okay, just last month, I kind of overlooked my bill. I don't always overlook my bill. It was really strange, because usually when I pay my bill, it's always in full, and at the same time I'll write paid. But maybe just that month it was just very busy. A lot of things were going on. I wrote paid, but I didn't pay. So what happened was I saw the bill and I was like, oh, I was charged for being late. I was like, okay, cool. Not an issue. It's just a phone call away and getting it approved to waive off the late fee, because I'm never late except for that day. So what happened was, it dawned on me that the bill was $1,865. So if I had failed to pay that, okay, with the rolling interest, I think as long as I paid the minimum, okay, which would be about $111 based on what existingly is stated on the bill, at the end of 1 year, I will have to pay a total of 2,500. Okay, this is kind of like the interest that's rolling. So Then there was another column, right, in that same bill where if I didn't pay at all, okay, it would be 2,900 estimated. And that's excluding whatever outstanding. So you see, there are a lot of people that fall into this category. I'm sure none of my CG Premier members or none of my CG Legacy members fall into that category because I've always mentioned clear your bills, clear your bills, clear your bills. But if you have a habit of continuously allowing yourself to have the outstanding amount on your credit card to keep rolling, then you're just always going to owe the bank. You will never find that financial freedom, okay, that I've always been talking about. Because every time when I mention it, people may think, oh, financial freedom is having the ability to spend on anything and everything that you want, having the time off from your job, blah, blah, blah. Sure. But I think also we have to have the best practices. So back to the story, right? So it dawned on me, if let's say there was literally, I know that there are more than a few 100,000 to even millions of people having this pattern where they have multiple credit cards and they always pay the minimum on each card. From there, this whole thing just snowballs, okay? And this is just on the credit card because of your spending pattern. So right now, whatever money that we make from the cryptocurrency space, right, I think it's a bonus. It has to start from your existing salary, right? Your existing salary. We don't talk about if you're running a business. We just talk about if you're you're having a salary. So this is the thing. If you're someone who loves to spend, you have to ask yourself, how can I make more so that I can spend more? Okay? Or alternatively, if you want, you need to start tweaking what you spend on. For example, is it necessary to buy this pair of shoes? Is it necessary to buy this dress every week? Why do you have to always spend on something that you don't need? Or you just spend on something that you want for the spur of the moment? I think all these things, as you grow up and as you grow up, as you mature, right, you will think differently. You will start thinking about stuff on the need and the wants. Now, when you're younger, you tend to buy a lot of shit that you don't need. Okay, I guarantee that. And even sometimes I buy shit that I don't need. There's a Nintendo Switch that's sitting in the fucking cupboard. I only played it once and I never played it ever again. Yeah, it was just the spur of the moment. Because when you have money, you tend to do crap like that. So eventually I told myself, okay, I'm going to start spending on stuff that actually will have value or retain value over time. So you see, I had to tweak the way I spend money as well. Okay, I love spending money on, firstly, I love spending money on experiences. So travel, I love having nice clothes. I love spending time with the family. These are the things that I would love to spend my money on. I don't mind spending a staycation at Suites just to, for 3 days, 2 nights, just to get away from, the hectic whole cryptocurrency space or just the stress of work, and just spend time with the family doing nothing in the hotel. That's the stuff that I spend on, right? Those things usually don't get you an ROI. But on the flip side, you do notice that I do create videos while I'm there. I'm still working, right? I still have a lifestyle. I still want to at least be able to put that into perspective, right? So all these things are helpful for me in the long run, okay? And then for yourself, if you are thinking along the way where, okay, I have this amount of money every month, I love to spend this amount of money, okay? So you ask yourself, how can I be able to always be able to spend this amount regardless of what happens to me in my job, right? So in your job, you're going to progress, or you're going to move on to another job eventually, and hopefully that new job pays you a higher salary, or when you get promoted, your pay increase will help you maintain your lifestyle. But however, sometimes people don't do that. They always spend just too much. So right now, I think the whole idea is to ask yourself how you're going to generate more income so that at the end of the day, you are able to spend on all these luxuries or to build your assets. I think the people who are very practical will always be spending money on building assets. For example, Andy, he's always very focused on investing. He will look at new financial instruments. We just recently found out that he invested in something like 10, like it's like for 10 years and it will get you like 5% or something like that. I'm like, okay, that's like 10 years and it will give you 5%. It's like a Singapore bond kind of thing. Okay, I was a bit shocked. So, it's like he, being the practical self, will always think of stuff like that. For me, being that I'm someone who believes in generating more money, right? I am someone who is a little bit more aggressive. So I will look at stuff that can generate a very high ROI. Okay, but at the same time, I also have countermeasures, which is very extreme, where it will just be stuff that does nothing, but it could be like purely in cash, purely in gold, purely in silver. Okay, I'm not a silver guy, but I'm I spend money on, for example, luxury items that appreciate in value, stuff like that. So that's kind of like how I look. And also property. I think property is one of the best things that you can probably invest in. They are not a very liquid thing to invest in, but when you reach that stage, you usually start building a property portfolio, because especially if you're from a country that has a high concentration of the population in that city, like Singapore, property is definitely something that doesn't go out of fashion. Now, does it correct in a bear market or whatever? Yes, prices do correct, right? And it's all about the amount of inventory in the space. So for example, if there's too much inventory in the property market at the moment, obviously that will cause the prices to tank, or at least correct, not tank, correct. And then after that, once the demand starts coming back in again, because the prices went down, everything will start to gradually go up again. Then, of course, there's the interest rate environments that you also have to take care, that you have to monitor, because if the interest rate environments are a little bit on the high side, then the rental income is not so favorable. It's just like that. It's just a matter of how much supply to demand. If there are definitely more supply, then your renters will have it's a renters market. That means they have the choice, because wow, there's so many units to choose from. I don't have to pay so much. So it's the same shit, right? You have to start looking at assets that are undervalued. So back to cryptocurrency. Now, with this cryptocurrency space at the moment, we have to ask ourselves which cryptocurrencies have a very limited coin supply, right? At the same time, what is the use cases for these cryptocurrencies that make them so scarce and in demand, right? So, for example, there are cryptocurrencies that have a lot of hodlers. That means they are just hodling the cryptocurrency, but at the same time, there's not much people selling it. So that helps to maintain the price. Okay, if you notice in a bear market, there are certain cryptocurrencies, especially the ones that are master nodes, or at least have a master node, they tend to drop lesser in price. Not saying that they don't correct in terms of overall pairing, because right, it's always pegged to something. So the pairs do have to match up. But then when you have that scarcity, you tend to have this price support. Okay, there's this price support. And if there's too much of a coin supply, you tend to notice there's a lot of speculation, there's a lot of movement. It's great for traders, but in the long run, right, because there's so much coin supply, end up the price will just continue to just go downwards over time, because there's something new that appears. So we are right now in this spot where we need to identify, if the market continues to tank downwards, are we in the right cryptocurrencies to help us fulfill our financial needs or our financial wants or financial lifestyle? We have to ask ourselves all this. And we must not be affected by how the cryptocurrency markets are moving. It's good to take note of it, but it should not affect your lifestyle, right? So all these things in play, okay, we're going to come up with a very simple guideline for you. And I think it's a matter of time that we start to do this, which is you're going to have to spend, or at least work at spending 20%, okay, 20% of your income, right? Your net income, less of your contributions or whatnot, and you only can spend 20%. I think it's time that we start having these kind of guidelines within the group, because I realize that no matter how much we give you in terms of information, but you are just having a very large hole in your own pocket, right? Hypothetically, a hole in your own pocket, that no matter how much we give you, you are not going to find any sort of financial freedom. You're not ever going to make it to the millionaire club. You're probably not even going to make to the $100,000 club, okay? Because you're just having shit spending habits. Just simple as that. So right now, we're going to have this kind of guideline where you're going to spend 20%, okay? You're going to have to spend 20%, and 80% of whatever that remains will be dedicated. Now, this is already less of what you need to pay for bills, food, utilities, transportation, gas, whatever you call it, okay? The necessities of what you need to spend, maintain. That's already a portion, part of that. Now, you are allowed 20% of whatever remains that you can spend on random shit to make yourself feel good once a month, or at least throughout the month. All right? And then after that, the balance will be dedicated to building up your portfolio, whether is it in crypto, or it's in gold, or is it towards your property, where you're paying off your mortgage. This is that part. You need to start growing up, because we are already 6 months into the group. Legacy is already 1 year, right? Exactly from when we hit 1st of July, we are already enjoying our 1st year anniversary. That is why if you have friends, especially, or family who are really struggling in terms of financially and trying to achieve a higher level of lifestyle, I think it's good that you kind of bring them into this group. All right, invite them in, especially with the discount that is going on at the moment. They are able to learn what you are learning. So that being said, you have to start having these kind of guidelines. Now, when in terms of the portfolio at the moment, right now, you need to also be able to segregate and have a dedicated, disciplined dollar cost averaging strategy. Because in a bear market, let's not talk about putting in money and then after that, raking in the 15-20%. Let's accumulate. Why? Because when we start to accumulate, when the bull market comes back, we will be ready. We are not interested in the 10, 20, 15%. Although there is money to be made in this manner, there are still people who are only focused on technical analysis. But in CG Premier, in CG Legacy, we all have businesses to run. We all have jobs to do. We all have families to take care of. We don't have time to sit in front of the computer like a 16-year-old, 17-year-old kid and brag about how great we found this pairing and that pairing. It is great to have these kind of skills, but I think it's good to be able to have a skill that when you are able to identify what are the opportunities, you can stay invested and decide when to take profit on your own. Now, yesterday I had an opportunity to do a review for my client. So his problem was he got into whatever I recommended. He was very thankful, but he was so busy that he did not take profit. Now, that comes to a very important point. That is why you are in the group, because the group is so active, right, that when the signal comes to sell, you have the choice. You have the choice, right? Because it's your financial matters. You decide whether you want to take profit or not. Unlike this individual who only has time to engage me from a personal level, right? He doesn't have the prompting like you guys do. So when you have the prompting, it's just a matter whether you saw the notification or not, right? For him, he is still very much in the money, but he didn't take profit when he should have. So if he had been part of the group, okay, he would have known when to take profit on BTC. He would have known when to take profit on his on Ripple. He would know when to take profit on his Litecoin, right? Because Litecoin went crazy, right? I told people, look, it's time to take profit. If Charlie Lee is out, you better start to take profit. And now it's at $75. See, so I'm just saying that it's good to be part of a group like this, because I'm someone who is not like, I'll sit back, relax, and do a video once in a while, and that's the message, right? I don't do a video course. I don't believe in video courses, although I know that there are people who love video courses, but I love the interaction. I appreciate for the fact that people take the time of their busy day to attend the live webinars, right? So this kind of interaction is very, very rare. Firstly, let me just say that for hedge fund managers, bankers, VCs don't have time to educate the public. Neither will they want to. They don't want to. Okay, it's too much hassle. Firstly, it's too much work to educate from stage 1 all the way until stage 10. They are the kind of people that, okay, I want to make money for the people around me and my investors. That's all I care about. You guys are also investors, but the difference is that I'm empowering you. CG team is empowering you so that you make the best decisions for yourself. You see, from there, you are guided. You are having this so-called personal relationship with the group so that you are able to act on these things. Now, what I realized is that even though I was a relationship manager for 6.5 years before I left, even my clients, right? My clients then don't even have the kind of personal interaction like you guys do, and you don't have to park money with me. That's the beauty. That's the beauty that everyone doesn't want to do. Everybody either wants to manage. That means I'm going to pool all this money from you all right now. You all pay me a management fee, and you all pay me a profit sharing after a certain period of time. Now, the next thing is that when you do this, okay, or if you do this, you pass the funds to us for CG team to manage. Unfortunately, you don't learn anything, which is great for some people, right? Because I don't care what you do. I trust you enough to park the funds with you guys, but as long as there's a return, right? Which is fine. But I want to allow you all to think from another perspective, where if I'm allowing you to make your own financial decisions, your decision-making process is so different. You are going to be at a higher level compared to everyone else. That means you have the skill sets to quickly achieve your financial goals. Fair enough, right? So despite the fact that a lot of people say, hey, can I just pass money to you? I really don't have the time. See, when you don't have the time, that's just an excuse. Really, it's just an excuse, because you want to be financially free, but you don't want to take the time and spend the money to get there. You see, that's the problem. And that problem has been very consistent in society for the longest time. Okay? I mean, look, I personally believe in letting other people who are more professional than me take care of certain things. For example, we just hired our new producer. She's going to help us do our videos so that our videos don't look like shit, right? That is the kind of thing. I can obviously learn it, but the learning curve may be too steep. But at the end of the day, how many people can do that? How many people are running a business? So for yourself as an individual, you have to make sure that you are in the right groups that are teaching you the right things. For example, if you're interested in technical analysis, we have Andy. You're someone who is interested in fundamental analysis and financial management and portfolio management, I'm your guy, right? From then, if you are looking at news, CG is already creating this whole basket, this group for you to look through the news. So all these things are what we are going to be focusing on for the group, and it's going to be so catered, so professional, that you're having like this weekly financial program and learning for yourself. It's better than any book, okay? And that is why I personally have been improving myself so that I can bring all this information to you in a very concise and fast manner within the hour, so that you know what to do. It's very systematic, okay? And that is something that I think no group in the moment is doing. Okay, so that's why I was looking through what's available out there. You know, who is offering what. Okay, and I noticed that no one has the best in terms of information. No one has the best in terms of holistic information that looks out from the group other than this group. Because everyone else is just doing the newsletter. Okay, send you the newsletter, pay you a monthly subscription. That's it. There's zero interaction. You're like, okay, so this is good content, but I want to talk to someone about it. You see? So right now, whatever content that we put out there, you can feel free to ask us questions every week or in the group. You see, you can clarify stuff very quickly, because I believe in that service. I believe that for the fact that, hey, you're part of this group, right? You're getting information, but sometimes you need a little bit of help to know how to apply that information. So you see, it's very, very different. And this team is like your personal relationship manager. You know how much of a deal and how much of a value is that? You can go to any private banking solution, right? If you don't have a minimum of 1 to 5 million, depending on which bank, you don't think about having a personal relationship manager. Okay, if you wanted to be back then in banking, if you didn't have $1 million, unfortunately, I cannot serve you. I mean, basically, the bank will not dedicate me to serve you. And the criteria to be in my portfolio is 1 million, right? So you see, where's the inclusion? Don't you have the right, if you're someone who has a net worth of 50,000, don't you have the right to know? So you see, that's when we started to scale, and that's when we came up with this group. This is something that we want to give everybody. And if you have friends or family who are interested, right, there is the first year anniversary promotion going on right now. Please get them in. I think it's something that they need to know that you have. I mean, look, I know that you have an X amount of friends. You don't have to get everyone in. Please don't. I don't want everybody in either. I believe in financial inclusion, but I don't believe that everybody deserves financial freedom. Okay? Let's just put the two things aside. So right now, if let's say you have any burning questions, you're really unsure or you're very shy to ask from a personal standpoint on spending and your current debt situation, feel free to PM us. PM me. Okay? I am the most equipped to be able to handle all these questions. PM me. This is for you in the group. And also don't forget that anyone who is new, who has not done the 1 hour orientation, please feel free to let us know. And also we'll have that 1 hour orientation every once a month. And at the same time, also, if you're someone who wants to be having a little more personalized consultation, myself or Andy are available, right? But that's a separate rate. Okay, so let's get started, man. Okay, so portfolio management resources to study recommendations. At what point would you begin to consider 2x leveraging, longing Bitcoin for a long-term strategy on market recovery price? Or would you largely still avoid mentioning the use of the L word due to the market manipulation with the worries about the Deutsche Bank heading with choppy waters? Okay, so these are the few questions. Okay, so let me address the question. So portfolio management resources to study recommendations. Okay. Right now, for portfolio recommendations, I highly suggest the Crypto Assets book by Chris Bernesky. Okay, that's a very good book. However, it's still a very unproven model. Okay, it's still a very unproven model. So what is the model? The model is based on the community, the team. I think we've mentioned this before, but I'll just go through again. Personally, even before reading the book, I already mentioned it to you, but I'll mention it again. So the team, the concept of the business, whether or not there are developers developing on it on a consistent basis. Is that developer community growing? Is there an investor community? Is there a community that is always consistently helping the project move along? Also, what are the number of addresses? What are the number of nodes? What are the number of transactions that are happening on the network? Is it a centralized or is it a decentralized blockchain? Is it permission or permissionless? So these are the things that will be covered in that book. Obviously, there are other things like, for example, starting from the standard deviation where you're looking at what is the risk to reward ratio. There is the CAPM model, right? There are things that we discuss from a technical standpoint, stuff that we've already covered. So to the moon, to answer your question, that would be the only book that I will recommend, which is the Crypto Assets book. Nothing more that you need to get. Now, the next question is, at what point would you begin to consider 2x leverage? Now, leveraging is something that I would say it will be a very select group. Feel free to PM us for leveraging. I think leveraging is something that is very, 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 very specialized. I do not want to deny people from the group from using leveraging. So that will be, if we have enough, we will hold a separate class. Okay, we'll hold a separate class on that and we'll run through very thoroughly the risks and rewards of doing that. but I want it to be a separate class. I really do not want to influence the group. Everyone thinks, oh shit, I've got $10,000. I'm going to fucking make it $100,000. How, Leo? Do you close off your short position? Leo, do you close off your short position? You short at 6,005, right?
Yeah, already.
Close already. Okay. So Leo did a short at 6,005. He did a 5x. It was very favorable for him. Yeah, but like I said, from 6,000 after it recovered back, to me, I'm like, okay, without leverage, it's not much. You have to be on leverage in order to do that. So he has a decent size account, so at least he was able to do it. The next question is whether or not how many people. You see, I cannot monitor how much you have, right? And some people are not in. If you came in with $10,000 and you're going to use 1,000 to short or long the market, okay, you have to be so disciplined that out of that $1,000, you're willing to lose $100 to $200. That means you're playing with a very, very small room, a small amount per trade. Because if you over leverage, your $1,000 can be gone in a matter of minutes. That's how quick, right? You want to have multiple bullets within that particular contract alone. So for example, if you have $1,000 that you're willing to long or short, right? You don't take it like a casino. You're going to split that 1,000 into 10 bullets. Okay? That's how we're going to do it. Okay? Because until you're disciplined, then we can start talking about it. But a lot of people are too eager to be rich fast, right? That they don't mind using 25% of their portfolio to go and whack the market, right? And then what happens if the trade doesn't go on successfully? You lost 25% of your portfolio that you have been building. You're taking so you've been staying invested, taking 10, 20, 15%. Then after that, in that one wrong move, 25% of your portfolio is wiped out permanently. Because don't forget, the moment it's on leverage, it is an immediate liquidation. So yes, I don't want to deny people of it. And the more people who keep asking, I realize that means it's almost time for a bull market already, not a bear. Okay? But yes, sure. With the worries about the Deutsche Bank heading with choppy waters, if we were to head into another global financial crisis, what do you think this would affect crypto's value? I am very curious myself, Ryan. Okay, I'm curious myself on whether or not this space, well, Bitcoin in particular, would stand the test of time, especially during a period of financial turmoil and crisis. Because don't forget that this space is still highly speculative. So I feel that we're going to have a very massive pullback. Okay, projects will start to panic because when the price of Bitcoin and Ethereum, which they raise, starts getting pulled out from the market, because don't forget, whoever is investing in this market will also be invested in other markets. So for example, and by the way, people are always on leverage, whether it's a hedge fund, VC, or whatever shit, they're all going to feel the pressures when that global financial crisis that you mentioned, they're going to feel it, because leverage is always in the cards. They always use leverage. They're always using other people's money, or they're leveraging the funds that they own on some platform that gives them a margin, right? So all these things are happening. After that, there will be this whole cataclysm of implosion or explosion. And then after it will send this whole fucking domino effect and everyone will be affected. So if that ever happens on that day, right? On that day, when there's this very, very fierce pullback, the crypto markets are definitely going to suffer. No doubt about it, it's going to suffer. But will it completely die? No, it won't. Okay, I can safely say no, it won't. It's just that at the moment, which projects are going to have enough liquidity and be able to run their business in the bear market, or in a true blue bear market, or including a financial crisis, are they still going to survive? That's when we are also very curious in CG whether we made the right picks during this period of time, that these are the best players to stand the test of time. Okay, and these are the players that are not spending money unnecessarily. They are actually managing their funds very well. They're hedging when they need to hedge, right? And yes, I'm very confident that Quantum will be able to do that. I'm very confident that Huobi will be able to do that. right? NPXS, they are very new projects, so yet to still determine that. So don't want to comment too early. Despite the fact that I have very high hopes for them. BTC is definitely going to be fine because BTC's value was created by the people. Now, has that changed with the whole monopolization of who owns what, who owns the largest hashing rate? And by the way, the article that Andy shared was an article that I forwarded, and I noticed, is this true? Perhaps because if really Bitmain owns 51% of the hash rate, right? And that is just something to be a little bit more concerned because they are currently at 42%, or is it 49%? I think it was 42%. So they are very close to kind of owning the network as per se. So what is the implication on that? It's quite concerning. So maybe people will start shifting away. I don't know. I think a lot of things are in the cards, and it takes some time for development. Okay, now the next thing is also relative to Ryan's points on saving money. I'm sure a lot of people know the resources here, but is okay. So yeah, all right. So hey guys, I noticed that you all are not asking questions. It's very weird. Like, why are you all not asking questions? There's so many things that we need to cover, and you are not asking questions. Like, people are going to be paying huge bucks of money to be coming for all this kind of stuff next time. But because we spoil you guys on a weekly webinar that you don't have any questions, feel free to ask questions. I'm very direct. I'm very point blank. I'm not a marketer, guys. I'm a very pragmatic individual. I'll say shit straight up. You see, please ask questions. And I noticed that the same few people are always asking questions. Where are the new fellas? You mean the new fellas are too shy to ask questions? Come on, man. Okay, for the first month on Binance for the airdrop, should we not gamble by selling high and buying low before and after the airdrop, or just leave the balance in the wallet to get the 7%? Okay, I have a few strategies. So you see, right now you have this amount of money that's coming in. I think it is time for everybody to start using the airdrop in the way it's supposed to be used. So what are people usually doing? So there's two schools of thought. The traders are buying right after the airdrop, especially when there's the dip, so that they just focus on the profit that the profit that they're going to make prior to the market running up for the airdrop. Okay, so far in the past few months, that is how they've been doing it. But however, in this coming month, being that the market is like that, it may not be as favorable. So maybe hodling the NPXS for the airdrop would be more favorable than trading the difference, right? Because if you let go before the snapshot, you don't get the 7.31%. But if you're someone who, you know what, I don't want to care too much, I just want the airdrop, then receive the airdrop, from then sell off the airdrop. Because I want you guys to have liquidity, guys. Don't keep thinking about accumulating, and then after that, you don't have fucking money in the bank, or you don't have fiat, right? I hate it when people keep saying, sometimes, right, that's my frustration. That's why I don't really like to talk in the free group anymore. In fact, if it's anything, I feel like killing off the free group. Because when you have the free group, right, you have plebs who will come in and say, I dodged the bullet that when Ryan said buy 6,009. I was like, dude, you wouldn't buy even if it fucking went to 3,000, because you know why? When 3,000, you still don't even have the money anyway, right? So right now, it's more of positioning the CG group to have some liquidity, because the airdrop money is free. How long will PundiX sustain its value? Nobody knows, because as the project matures, as there's less hype, the thing will taper off, and people will liquidate whatever PundiX they have, and whatever value that you see now will be lesser than what it is. So always be very careful. Every chart is the same. I'm not saying that PundiX doesn't have a good deal. I'm just saying that that's just what happens. And as a project matures, you're going to see that the value of the crypto is lesser and lesser, because the speculative value goes down, the utility will start to show. Is this really practical? Is this really in use? So that's what's happening. Okay. So next question is, do you trade on leverage or just invest? I personally just invest. I don't trade on leverage. With GFCs, how do we best? Oh shit! What is GFC? What the heck is GFC mean? Oh, what? What World Cup, bro? Oh, global finance. Oh, okay. Dude, don't create a new acronym, man. I didn't know GF. Like, why would you? Oh, man. Okay, with the global financial crisis, how do we best maintain wealth? Oh, you mean the term GFC is pretty common? Ah, okay, okay. Oh, okay, okay. Was okay. Why I was broke in '08 without buying into overpriced shit. Just hope fiat property market here is overpriced and its buy-in price is too high. Okay, global financial crisis. Okay, but how do we best maintain wealth? To best maintain wealth in a global financial crisis, right? Usually, okay, it depends on, okay, see, this is the fucking tricky part. Okay, I better watch what I say right now. Okay, and I hope that people are listening. A global financial crisis can happen on two fronts. Either the country fucks up or the corporate companies fuck up, right? And usually it's due to the fact that there is an over leveraging of synthetic assets that have been fucking being sold over and over and over again. That once the shit hits the fan, that the main underlying asset fails to collect payment, right? Basically, the asset just is too overvalued. That basically everything just it's a domino effect. So it collapses, and all the synthetic bonds or synthetic derivatives that are pegged to this underlying previously will be affected. Okay, so right now, although you are feeling that property is too expensive, okay, then you might want to take a back seat based on what kind of risk profile you are having, right? Start to do something that is uncomfortable for you, which is to stick into stuff like cash or gold. You have to look at stuff that at least is not going to move during a financial crisis. Now, the next things that you can consider are so far you can look at REITs, right? Real estate investment trusts. They are basically the top developers coming together to bring their their property portfolios together, and they don't mind sharing the profits with the investors of that REITs. REITs are real estate investment trusts. That's one option where you don't have to have huge chunks of money, right? You can look at those. They are either mutual funds or unit trusts that are in REITs. There are ETFs, exchange traded funds that are based on the real estate investment trust model. You can consider that. What's our strategy for coming G20 summit? Do you have anything? Okay. You can zoom in on some of the questions.
Okay.
Yeah.
Okay. So let me see. Okay, to answer the question on the property side, I think Ryan did made a great point about holding gold and US dollars. So the whole entire idea here is, right, if you have realized that gold prices is on a low, partly because US dollars has been going up. So it's all about buying low, selling high, right, in crypto. But when it comes to different kind of asset in terms of safe haven, right, it's the same logic. You need to buy it now so that when GFC do strike in that sense, gold will be more popular and therefore you can sell it later. So it's all about preparation, and it's all about foresight and preparation. And you know, the market has been heated up for the last, at least for 10 years, right, without a pullback, a massive market pullback. And but there are telltale signs that it's going to be happening soon. And you know, unemployment is slightly inching up. Undeclared unemployment is also inching up, right? And we see how global properties has been on a boom, on a high. And so the whole entire idea here is when you need to hold enough cash and enough gold, and therefore when the whole economy downturn do come, you can always buy into cheap, example, dividend stocks or REITs, example, That's for safe kind of asset classes. If not, you could always sell your gold, use your cash, and then buy into properties, right? And sometimes it only takes just one or two properties. For those who are in the group who own some properties, you know that once you own a few properties, it's easier for you to flip, right? Because you can then mortgage that particular property to mortgage it as a lateral to kind of buy the next property kind of thing. All right. So of course, so it takes a few rounds, a few times to roll it. But once you get to the hang of it, you understand the paperwork and everything. Therefore, you'll be ready. So the whole entire idea here is the same logic as how we prepare for cryptocurrency market is that you register yourself with all exchanges, you submit your KYC, you never know when you're gonna need it, right? I mean, personally for us, we moved from Bitmex to Poloniex to Bitmex to Binance and then Huobi and then things like that. So we got approved on almost all of the exchanges quickly. Same logic, you just need to be prepared for anything that's to come. Okay, so that's one logic. Now, what was the other thing? Okay, so the other question is how are we going to prepare for the G20 summit? Now, I say the G20 summit is not a bad thing. Okay, neither did they say they're gonna ban whatever not. It's really more of regulating it. It's really more of understanding it, discussing it, the possible impact. And if I remember correctly, in the article, Brazil, they actually mentioned that they're gonna legalize cryptocurrency. Okay, they are not gonna be participating in the G20 summit. So it really depends on what comes out of that particular meeting. But to be really, really honest, regulation is always good in the long run. Okay, short term wise, it may impact the market, but long term wise, it will definitely help the market to be more mainstream. And at the same time, honestly, the real market that will really move the whole entire crypto market, the news will only be coming from China or Korea, if you have realized. And we talk about big time hack, we talk about Coinbase hack. Those are small hacks, but it came from Korea, and therefore the whole crypto market got affected. So now you need to understand in terms of sentiment analysis, which particular country news will affect the crypto market. You realize a 30 million hack, it's so tiny, but it's on Bitthumb, and therefore the whole entire market tanked. So that's what I'm trying to say is that you, instead of focusing on what's going to come, you need to understand what had happened previously and understand which geographical locations news would impact the crypto market itself. I know SEC announcement is definitely going to affect. I know Korea, if they say they want to ban ICO, remember when they said they want to approve ICOs, well, the whole entire market went up, right? Or if let's say China were to say let's legalize certain things. Let's create our own PBOC token and things like that. So the whole market will pick up again. So now it's really understanding which news impact the market. And not only just that, you need to understand which particular news will impact the token's price also. Like for example, is it airdrop? Is it a fork? Is it a mainnet launch? Is it an improvement in the protocol? Is it a convention? See, the crypto market last year the market used to be moving by news, right? And I don't know if you remember, like DigiByte had a competition, and they didn't even win the competition, but the DigiByte's price got priced up like 80 to 100%, and everyone was all over DigiByte. And then it's just a stupid competition in Singapore. It's a small competition, and it doesn't mean anything, but the news got hyped up. So that was how bad the market was last year. It was all based on hype. But as investors get smarter now, it's a lot tougher to really evaluate the market. So I'm also having a tough time to really understand. But I'm trying to draw the links between what and the different markets are doing, and trying to draw links on what impact a particular token's price and things like that. So that is what you should be focusing on. Instead of thinking about things you cannot predict, you want to think of things that you can predict, and that when it does come, potentially what could it impact the price. Like that example, this particular token will have a mainnet launch, what could happen, things like that. All right. But other than that, the volatility of the market is something you cannot predict. Right? Okay, where are we? Okay, blah blah blah. So now we're on property. Okay, good. Anyway, let's see.
Oh, you want to talk about
Yeah.
like certain mutual funds?
Oh, mutual fund.
Okay, maybe I'll zoom in on that. Let me talk a little bit. Okay, regarding mutual funds, right? I think this is something that is a little bit off topic from the usual crypto, but I think I want to kind of I want to give you some attention. Okay, so since there are people who cannot or do not want to invest in property, I think it's always good to look at property from various standpoints. So there are certain funds that are emerging market property. There are also funds that are in first world country properties. So, for example, if you want exposure to Hong Kong, the Philippines, so you can find funds that are having certain themes. So Asia Pac REITs, for example, ASEAN REITs, Singapore REITs, stuff like that. There are REITs that are available in these sectors that pay a very nice dividend. So you can look for a fund that does that. That's why I say we are not giving you financial advice, but we are giving you recommendations, and you can go and look through your own mutual fund brokers and start looking at it. Now, the problem with mutual funds is that they have a high fee for management. Okay, I don't like it. But you can look for exchange traded funds, right, that give you exposure to these assets. Okay, that I think is one good thing, and you don't have to leverage, right? You can put in $10,000, $20,000, and you just grow that little portfolio. Same thing, do a DCA on that, because right now when property prices are going up, right, it tend to affect the yield to return on the price, because as the price, okay, but if the price is kind of stagnant, right? If it's kind of stagnant, for example, landed properties here are not so in demand compared to condominiums and government housing. Okay, it's easier to kind of rent out these things. These properties and commercial properties. So another theme that came to my mind was perhaps coming up with a real estate investment trust in the co-working space environment. Because the co-working space environment, a lot of people want to be entrepreneurs these days. The young are into, doing my own thing, having time freedom and all that. And I want to be an entrepreneur and shit like that. So the co-working space has actually exploded. So I'm thinking that if there is a fund that is invested in these co-working spaces, right? Especially with a strong branding name, a strong developer, for example, or service management, right? These are facility managers that are managing these properties, and they are just basically renting out the co-working space. It's very lucrative, by the way. Okay, it's very lucrative. So that could be one consideration as well. Try to look for stuff like that within your area so that it's a little bit more familiar. But I know that the more land you have, unfortunately, you can't command much rental, right? So from there, then the companies that are creating this can't really have much margin, and in turn, they don't really want to share any profits with you. So this is something that I was looking at, and I want to share this idea. I personally have not bought, but now that I'm sharing this with you, I'm actually going to look into stuff like that. Gold is, same old, nothing much. Just when you make money, please go and buy some gold. It's great just to have it in the event that a GFC happens. Okay, I'm going to use this term, GFC happens. I think it's going to be so good for you. It's like yummy yums, okay, because you are having gold appreciate, right? Rather than keeping it in cash, you have your gold appreciate, and then at the same time, you can act on the market. You see, that's a good thing. It's wonderful, right? Okay, question. I'm financially well and delving completely into crypto at the moment. I'm aware that income can be thin for 2 years. Income can be thin for 2 years without profit takes. Okay, what sort of bankroll would you assume is required to do crypto 100% full-time with no side hustle, assuming I have enough money to survive 10 years with no job? Well, this is a very structured question. I'm aware that income can be thin. Why is income thin? I don't understand this part. I'm aware that income is thin for 2 years period without profit taking. Oh, you're saying that if you're staying invested, potentially 2 years, I'm assuming. You're talking about your portfolio could potentially not be able to take profit for 2 years. Okay. Okay, what sort of bankroll would you... Okay, got you. Okay, what sort of bankroll would you assume is required to do crypto 100% full-time? Okay, so my next question to you is very simple. What is your expenditure plus your kind of lifestyle requirements per month? Okay, then from then you do a backward calculation. So if you have okay, see, I don't know where you live exactly and how much you spend on stuff, right? Because if you're saying that you want to have a cryptocurrency portfolio for trading alone, right, and you want to do it full time, then you probably want to be able to have a decent size account. So the question is, like I said, I don't know the figures. If I know the figures, then it will be easier to give you a number. Outgoing is 50K per year. 50K per year. Okay, assuming outgoings are 50K per year. So if 50K per year divided by 12 is how much?
Oh, 4K?
40?
48K ma.
No.
4K.
4 point? 4 point. Okay, 4.166. Okay. So you probably okay, so yeah, probably it's 5K per month. Okay, so if it's 5K per month, that means you ask yourself one thing. You can have a 50K account, okay? You have a $50,000 account, and you make one good trade per month, and you earn 10%, you're done, right? Or if you want to challenge yourself, and you see, I don't like to challenge myself. I'm actually not I don't like to challenge myself in this kind of stuff. If I'm already winning, I want to make it as easy on myself as possible. I will do a 100K account, and I do one trade, and I make 10,000 a month. See, you see where I'm coming from. So if you have less, you work harder. Fair, right? So if you say that I wanna do it with a 20K account, so you ask yourself, how are you gonna make 5K with a 20K account? Same thing. So you position yourself. So I want to have less. I want to take profit faster, but I achieve what I want to achieve. You see where I'm coming from? If I am someone who has an expenditure of 10K, I want to make sure that I have a 100K account and I do one trade or two trades a month at 5 to 10%, and I'm done. That's how I think. That's how I work. If I'm someone who's trading, that's how I would advise. Okay, so same New Zealand dollars, it doesn't matter. Okay, so when BTC allocation gets smashed in the down, oh shit, wait, there's another question in legacy. Okay, what other, okay. Are there other cash and gold? Do you have any real world airdrop assets?
I can talk about it.
Okay, maybe yeah, Andy, you wanna cover that? Then okay. Yeah, good. I'm happy with these questions, guys. These are very good questions.
Okay, so
keep them coming. Wait, let me mute the mic.
Okay. So wait, okay, let's see. Where's my image? Can you see? Okay. Anyway, so this particular book that I own, it's about value investing in REITs. Okay. So I personally like REITs also because it actually diversifies the portfolio a little. So let me just give you a quick introduction about REITs, just verbally like that. Okay. Now there are three types of REITs to begin with: equity REITs, mortgage REITs, and hybrid REITs. These REITs are all over the world, but in terms of Singapore context, it's usually equity REITs. Okay. Now, even under the equity REITs, okay, there's also 4 to 5 categories. Okay, so let me just quickly cover that also. Now, in the whole world, right, there's this how are different properties classified? All right, you also understand. Example in Singapore context, there's Frasers, there's Capital Land, and there's certain big firms that that controls a certain country kind of properties, right? So you realize and you notice that like offices could all be named under the same company, or shopping centers could be all named under the same company, right? I don't know if that's apparent in your country, but I think so. So the first one is called office REITs. All right, so offices are basically owned by a certain major shareholder or major developer. It's called office REITs. Now these REITs, right, are cyclical. Okay, and if you want a higher yield to compensate for this fluctuation, because you need to understand how REITs work, which is based on tenant and based on economy. Okay, so this really requires you to understand the sentiment of the market. So for instance, when the market is not doing well, a lot of company will close down in that sense. And therefore, or they go in liquidation, and therefore, the office rental won't be as sustainable. So these office REITs tend to be unable to pay in terms of dividends payout to investors. Okay, so you need to understand that office REITs, how when you need to take advantage of how the economy is moving, and therefore your portfolio has been allocated in that sense. So it's another art on its own. So that's one. Okay, the second one is called retail REITs. That means shopping centers, all of those are called the retail REITs. Now these REITs, right, can be a steady and predictable amount, but you also need to understand that when everyone goes online and shopping nowadays, shopping centers rental are not as nice as before, because you realize certain malls nowadays are quite empty, especially in the US, I'm aware. and so this is the REIT, which is the shopping center kind of REIT, the retail REIT. Okay. Now the next is industrial REITs. Industrial REITs means factories, manufacturing plants, certain commercial REITs. Okay, in Singapore, example is Ascendus, right? They also own or Maple Tree Logistics. They own quite a lot of different kind, or even Keppel, right? So these are the industrial REITs. Now they are also cyclical, and they all depend on how the economy is moving. Fourth is hospitality REITs. You own a share of the hotel, you own a share of tourism, and this big example Marriott, example big developers that owns properties, okay, or even for hospitalities, things like that. And once again, this is also quite they actually kind of stay steady cash flow through economic cycle because people still travel. It's just whether there's more or not. All right. And last of all, which is actually the best or the most stable, is healthcare REITs. Now, you don't need to understand that when economic downturn comes, you need to understand what is inelastic demand, which is when it comes to economics. So inelastic demands means that you need to find certain products or certain things that are inelastic in terms of demand. Meaning, to say, example, if let's say economy is not doing well, I can give up on cigarettes, I can give up on alcohol, right? But I can never give up on healthcare. I can never give up on food, right? That's the basic necessity of life. I mean, that's how hospitality REITs come into play, because this is like a long-term bond, right? People still need to go to hospital. People still need to get to work. People still need to get to hospital, example, for treatment and for whatever sense, right? Medical supplies will still have to come in. Pharmaceutical company will still be working, things like that. So when you understand that point of view, you need to weigh and you need to understand how the world economy works, okay, and how human works. So that's the reason why I kind of love REITs, because it's very down. It's very, you need to understand how the society works. You need to understand how human works. It's very exciting to me, and it's a kind of like a medium, like a medium to long term kind of thing. But that being said, even in Singapore REITs alone, I've analyzed some of the REITs in Singapore, the more popular one, and I ran through a certain dividend payout kind of thing. Their dividend payout can range from 5 to 8% annually. That can also apply to 5. It can also be 5 to say 11% for those who are more higher paying. And you need to understand, right? Below bonds, in terms of payout, REITs will be the number second one. Okay, now REITs actually has a certain law or mandate by the Singapore government, at least, that they have to pay out their profits. They have to share their dividends growth. If not, they cannot be classified in REITs. And therefore, in terms of payout, in terms of dividends, they are kind of like the second most secure. The first is of course bonds and coupons, right? Government coupons. Number two is actually REITs. Then comes the stocks. All right. So if stocks don't pay out, we can understand, right? Certain stocks go through liquidation quite often, but REITs still have to pay out. So you have to study the law in your particular country, wherever you are, to understand how REITs work in your country. In Singapore, I know inside out how it works, so it's easier for me to invest. And therefore, this is what I talk about preparation. Right? We can just give you and we can plant the seed and the idea into you, but you need to understand how it works in your economy, how it works in with your government mandate and law. And then you see how you can actually make that dividend growth. And I calculated, for instance, if let's say I were to put maybe 1 million into a REIT portfolio that I've done, and I get a payout of 8% per year, that's $8,000. Is it 8,000? Or is it 80,000? Shit. Cannot remember something. Yeah, so there's a 80,000 profit per year. Okay, so like example, I put 1 million in a REIT portfolio that I do, and overall I get 8% per year. That is 80,000 a year in terms of just dividends, and it compounds with that. So as long as you know this can be kind of like a small segment of your portfolio, overall portfolio, that stabilizes you. So no matter what happens in the crypto market, therefore you can take a little bit more risk. And that's kind of like my idea, that is you kind of create something that's safe, so that you know that you can take more risk when it comes to trading or when it comes to crypto, right? So you need to make sure you have that stability first. Okay, yeah. So that's the part to answer your question in terms of REITs. Okay, yeah.
Okay. I think overall, they are also. I'm starting to research, and I noticed that. Okay, so unfortunately, looking at the current environment, especially let's say if I look at Singapore, there are no co-working space REITs available at the moment. I think if you wanted to invest in the stocks directly, it's still okay, but I'm not sure whether the stocks are growth based or dividend paying. Co-working space, I think, has been around for 10 years, but I think no one has thought of bringing them all together. But I noticed that there is talks in Wall Street of repositioning, instead of having malls or residential, okay, where the rentals are not fantastic, there is a swap to bring in co-working space operators into the mix for the fund. So we probably will see that a little bit later. So even if you wanted to invest in a co-working space, you're either coming in as an angel investor or you're coming in as a private fund. And usually when it's a private fund, you usually have to declare AI is the same shit. But yes, these are the things that you can start considering. Is it open publicly at the moment? I will have to do a little bit more research. We'll get back to you probably in the next episode. Okay, guys, it's 11:51 here in Singapore. We have a bit, maybe 9 minutes more. If there are no further questions, I think we better move on. I think the telecommunication space is also a very good space to invest in, okay? Because regardless of whatever market, we are always still needing telecommunication. So maybe you can look at the China-related phone brands like Xiaomi. You can look at this Huawei. You can look at Xiaomi, Oppo. I think all these companies are starting to raise funds and probably they're really listed. They're probably already listed, but the problem is there's
Xiaomi IPO.
Oh, Xiaomi IPO. Okay.
Huawei listed Hong Kong.
Okay, so you see the thing is, right, they are listed in some kind of, it's a Hong Kong exchange. You try to get some exposure on your side. I'm not sure how. I think the telecommunication game is very different in every country, so I don't want to just talk about something and then after that I get it wrong. Like for example, the telecommunication companies in Singapore at the moment are very, very saturated, very profitable, but there's only three telecom providers in Singapore: Starhub, Singtel, and M1. So right now, I think I'm starting to look at all these kind of things. Although they're going to be very boring in terms of returns, but it's going to be definitely more stable, more mature, especially in a bear market. So if you're asking, telecommunications, utility, healthcare are the stuff that you want to look at, especially if you're preparing for a GFC. Gold, silver, precious metals are definitely a good to go. REITs are also another option that we considered and talked about. Then, of course, naturally, if your end game is to own your own property or even create your own co-working space, especially if you're someone who is in a country that land prices are cheap, and at the same time also it's still a growing community of youngsters who want to be entrepreneurs. I think the co-working space business model is something that you should look at. So I think if there is let me see whether there's any legacy, any questions. Yes, no revenge trading, please. Okay, so for example, if your portfolio has dipped 40%, okay, so if your portfolio has dipped 40%, you say you want to short, right, with whatever money you have to try to recover back, and the market actually turns on a bull run against you, you just lost another additional 10 to 15% of your portfolio again. So bringing your total loss to anywhere from 45% to even 50%. So please don't revenge trade. Be disciplined, stay within the boundaries, and I think we should be good. All right. With that being said, thank you so much, guys. You guys have been awesome. Thank you for all the questions. We'll see you in the next webinar next week.
Sorry, guys. For renewal, please take note. There's only 3 days left. Do you want to cover the NPXS?
No. I mean, what's there to cover? It's the same.
Okay. Yeah, that's all. Thanks, guys.